everyone, in today's video I want to cover questions you should ask yourself before you jump in and invest in small towns. I know that those cash flowing properties in those smaller cities are super attractive, but I want to make sure you do it with eyes wide open. So be sure to watch this video to the very end because I cover my pros and cons with investing in small towns, because I actually own some properties in small towns and I have some lessons to share with you today. Hi everyone, welcome to Financial Nirvana Mama YouTube channel. Thank you to everyone who's supporting my new YouTube channel. My goal in creating these YouTube videos is so that you can invest with confidence and with conviction so that you can design your ideal life. I'm going to be posting videos every single week for you. So if you're new to my channel, be sure to hit that subscribe button, that bell notification button, so you get the latest and greatest videos coming to your inbox. Now let's get back with the video. I know how you feel. Finding nice properties in nice locations that are cash flowing are super hard to do. In fact, there's a saying that 80% of the rental or real estate is not cash flowing properties, if not more. I would say probably 90%. So most rental properties, most real estate investments are not good deals. That's what makes real estate investing actually very hard to do, because it's actually really hard to find a cash flowing property. I get it. I've been there. You're probably in that situation where you're saying, man, there is some rental properties in these smaller towns. They're cheaper. Their rents seem to work out. And it's just so attractive. I know how you feel. I've been there and done that. I was frustrated, flat out frustrated with the amount of rental properties I was looking at in Ottawa. So hard to pick and choose and find a positive cash flowing property. So when I picked up the Canadian Real Estate Wealth magazine, where every year they cover like the top 10 provinces or cities to invest in, and they cover cities like Estevan, it caught my attention because the rental income that they were marking back then was $2,400 for a month for a condo that cost $220,000. At that time, Estevan was happening like with lots of high-paying salary jobs in Saskatchewan because the oil was just doing really well. The price of oil was shooting up, so the average rent was just shooting up awesomely. That got my attention. Now I realized that years later, like now, that booming small towns aren't for everyone. In fact, sometimes they can be downright not good. So if you are choosing to invest in a small town, please do it. Only do it if you really know what you're getting into. So it was in 2011, I decided to invest in a small town of Estevan in Saskatchewan, which is 2 hours outside of Regina. Now, this super small town only has a population of like 11,000 people back then, and the average housing price in this small town was around low $200,000. There's so much work in Estevan that housing could not keep up. Like, people were literally turning down jobs because there's nowhere to live in Estevan. I was just so caught up by the inexpensive prices, the high rent, and prosperity and growth in Saskatchewan. I mean, Saskatchewan and Alberta were the two it provinces in Western Canada, and basically there was a ton of hype about investing in those two provinces. And Estevan's real estate was so attractive because of its low vacancy rate and very high rental rate. Like, it was supported by energy, mining. You could get a 2-bedroom apartment for the low 200s, and it could easily fetch $2,000 plus in rent. Again, let me repeat that. You could fetch an apartment, a condo, for the low $200,000 and fetch $2,000 plus per month in rent. And add to that, if you invested in Estevan back then, property taxes were waived for 5 years. So it was just an amazing deal. So of course, I jumped in because the numbers were perfect. I knew the town well enough because I visited. I did a co-op job near there for a year. So it was close to where I grew up, so I was comfortable investing in Estevan. Plus, I really needed a turnkey investment property at that time because I had 2 young kids. I purposely chose an out of province property so that I could get a property manager and then have that property manager take care of that property. So then it became like much easier to grow my portfolio back then because I was juggling twins at that time, young twins. So I decided to pull the trigger and buy that condo. Now, 2 years, things were perfect. I collected the rental income. It was at $2,400 a month for this $220,000 property. Things were well. I had no problem finding tenants. My property manager was excellent in marketing this property on Century 21 MLS, and it had no problem finding like a long waiting list of tenants. The peak rent at that time was $2,400 a month, and I collected no property tax for 5 years because Estevan was trying to give incentives to investors and people to move there and buy housing. So in the end, I netted like at least $1,000 in cash flow from each of my condos per month, and covered and that's after all my expenses. But then things changed. In 2014, the oil crash happened. At first it was slow, then it fell 50% in just a matter of months in 2014, and all the other energy sectors followed, and so did the housing market in Estevan. So the party had officially ended in Estevan. So the morning after the party, you don't want to be the person holding the bag. Well, guess what? I was holding the big fat garbage bag, and I was in charge of cleaning the mess up. So if you find yourself eyeing that booming small town because of real estate magazine like I did, and wanting to, should I invest in that small town? Do it with eyes wide open. During the oil crash, my tenants left due to the changes in employment. They had no job anymore, and it didn't attract much interest in that small town. So guess what happened to my rental income? It went. Thankfully, I was really, really on top of the what's happening with the markets, and I knew that, having this oil crisis happen was not good, and none of the landlords at that time was budging on their rent. So what I did was, with my property manager, we decided to substantially drop the rent, and we found tenants. I only came out losing 2 months of vacancies, where I didn't collect any rent. Now that still sucked, but at least I found tenants after 2 months. Thankfully, even after dropping the rent substantially, the property broke even again because my property taxes were waived at that time. If this sounds familiar to you, it's a tough situation to be in. I super understand. So here's what you need to know before you invest in small towns. I want to share the good, the bad, and the questions you should ask yourself before you invest in small towns. So let's start with the positive side of investing in a small town. The first one is a low entry price. Properties can be significantly cheaper than, big cities like Vancouver, Toronto, Ottawa, Montreal, which makes it super enticing to any investor who's from those kind of big cities. What that means, you get greater cash flow, you have a probably better return on your cash on cash return, meaning you're getting more cash based on the amount of cash you put on as a down payment. So your cash on cash return is, looking pretty good. And it becomes a win-win situation from a financial perspective. Of course, second thing is, you have less competition. You might not have a lot of competition with other real estate investors in town. For example, you could be one of the very, very few rental properties that provide rental units in that small town for executives and transient workers. So additionally, you could benefit during the purchase of that property by not having to worry about, multiple bids and losing deals. Another great thing about investing in small towns is sometimes they can attract really, really high rental rates. Sometimes rental rates could be so much greater than the average rents in the bigger cities. So in a booming small town, with transient workers coming in and out, they got a lot of incentives. They got like accommodations, incentives, they get generous allowances, they got generous salaries. So it just drives the rental market. And of course, get incredible rents, incredible cash flow coming into your pocket. Now, there's also rental property incentives like what I experienced. So with the housing market is super hot in a small town, that small town is going to do whatever it can to attract landlords, investors, and people to move down there so they can offset rental property taxes because they could waive that. They can offer building incentives to developers so that they get a rebate if they choose to develop in that small town. So there's just lots of incentives sometimes to invest in small towns. Now that sounds great, awesome, but be super, super careful because small towns can be a pain in the ass. So let's continue with the bad about investing in small towns, just to balance the good side. Number one, slow appreciation. Now, property values typically don't go super, super fast in a small town as they do in larger cities, because in larger cities, they got way higher growth in population. With higher growth in population, it's because usually there's a huge demand in jobs and it becomes sustainable. In small towns, usually could be a very short-term situation where you really need to say, what is causing the boom right now? Is it sustainable in the long term? Has it happened in the past? Has it happened in the last 20 years? And so you really need to think about that from a long-term investment perspective. Sure, it gives you a boost in cash flow, but from a wealth perspective, from an appreciation perspective, it's usually a lot smaller. So you really need to think about investing in the long term, especially investing in a small town. Can you see yourself holding that rental property for at least 5 years, if not more? Another downside to investing in small towns is the smaller employment market. When the employment sector is hot, rental demand is high. But when the employment sector is a bust, rental demand just goes, and all of a sudden the transient workers leave and the town becomes stagnant, which equates to high vacancy rates and long-term holds between tenancies. So this is coupled with a decrease in property resale demand, meaning you could be stuck holding a vacant and illiquid asset for years. So this really hurts if you really need your money. Say you always think, what is your exit strategy for holding on to this rental property in this small town? Can you risk having that money stuck for years and years in the small town? Because housing is illiquid. It's really hard. It's not like the stocks where you could just decide, push a button and then sell it. Ask yourself, is it a boom and bust town? Small town real estate can be quite volatile. Oil and energy rich cities are affected significantly by the volatility in commodity prices in the financial markets. Things can go south really quickly with any economic change, as shown in the drop in the oil price in 2014, 15, and of course recently this year. Also, there's limited services. There's generally just lack of services in small town. So you don't have, for example, if you're trying to build a core team where you're trying to look for a property manager, a handyman, and a great realtor, that can be really hard to find. So ask yourself, do you have, especially if it's like obviously not in the city that you're living in, do you have a core team that can help you manage your property? If you can't seem to answer that, you're having difficulty finding these great people to manage your rental property, that could be a sign maybe you don't want to jump into small town investing. Now that the good and the bad are out of the way, I encourage you to just simply use your common sense filter and ask yourself these questions before considering investing in a small town. Number one, can this area grow in the future? Now, adding jobs and creating demand for housing Or will it go down in value due to declining populations and economic changes or loss of jobs? Because that's really what creates wealth, is increase in population, which drives increased population is driven by increase in job demand, and is it sustainable in the long term? So you could check that in Wikipedia or the Statistics Canada for that city. Ask yourself, how long can these high rental rates last? Will it last for the time frame that you're looking to hold on to that unit? Ask yourself, who are the main employers in that small town? Is there a diverse set of employers, or is it a very, very niche set of employers? Because that will increase in size or decrease in size in the future. Also, do you have enough real estate portfolio to absorb any shortfalls when the market goes bust? Or do you have a generous contingency fund for this property? Like I've said in many videos earlier, please reserve at least 2 months of rental income as cash reserve to offset, these downturns in your real estate portfolio. Also, ask yourself, do you have multiple exit strategy? If the market turns sour, which it does, just like the stock market, the housing market is also the same. It has ups and downs. When the market turns sour, will you have trouble renting the unit out? Can you lower the rent? Can you provide incentives like a shorter term lease, furnish rentals, or provide a rent-to-own option? What is your exit strategy? Don't always rely on the one exit strategy, which is simply selling that rental property, because you might be stuck with an illiquid property for a very long time. So what are the other strategies you can do to help you boost your rental income and get you staying in the long term? What's your competitive edge in a slow rental market? If you are an out-of-town investor, do you have a team backing you up to make sure that your property is managed and you can trust that team to do whatever they can to market your property in a market downturn? For any investors just starting out, ask yourself these questions. In fact, to make it easier, I would say avoid small town investments, because small town investments are a bit trickier unless you're actually from that small town. But personally, I only buy properties in neighborhoods that I completely have strong confidence and conviction in. So I'm very selective of the neighborhoods I choose in the cities that I am very, very familiar with. So I would just say, if you're a new investor and you have never lived in that small town, I would say avoid it. If you found this video super helpful, please give me a thumbs up. And if you are new to this channel, please be a subscriber to my YouTube channel. I make videos every single week to help you invest more confidently so that you can design your ideal life. So please hit the subscribe button, that bell notification button, so you get the latest and greatest videos coming to you. Thank you.